Don't put your yield at risk, put your trust in proven solutions. Anvil Nitrogen Stabilizer, Super U Premium Fertilizer, and Tribune Nitrogen Stabilizer from Koch Agronomic Services. These products offer higher active ingredient concentrations imitator brands can't match. See the difference at defendyourn.ca.
Time for another beef market update here with Real Agriculture. We're joined right now, of course, by Ann Wasko, the Gateway Livestock Exchange, based out of Saskatchewan. Hey, Ann, how are we doing?
I'm good this morning, Shaun.
That's good. Okay, so it's been a wild and crazy week in the
Yeah,
equity markets, the bond markets, the currency market. What's happened in the cattle markets?
the cattle markets. Yeah, as far as the U.S. is concerned, you can add cattle markets and futures. What a wild ride, down early in the week, then up, then back down again. So futures, both live cattle and feeder cattle, have been extremely volatile. And again, at the forefront in terms of the U.S. market on cattle, sorry, remains, of course, the China tariff war, or if you want to word it that way. Canadian markets, for just looking at it from that perspective, I think have held together pretty well so far. But let's go through the numbers. Cash cattle in Kansas this week were down $4 to 204 compared to last week. In the north, Nebraska, Iowa, 208, so that's 2 to 5 lower than last week. On the live market, and dressed 327 to 328, that's $7 to $8 lower than last week. So U.S. markets are getting clipped, or have been clipped this week, with all the news and action in the futures market. The dressed cutout price, that wholesale price we talk about, it's down $4 as well this week on the choice. Closes at $334.30, and that select spread's still back about $19. So that's kind of how things ended in the U.S. this week. The local market in Alberta did pick up $5 dressed, so $4.75 delivered. Was where there wasn't a pilot trade this week, Shaun, but that's where the trade happened at. Watching carcass weights to give us one of the barometers for feedlot currentness, we were down another 2 pounds on carcass weights last week. So we're at 949. That's 5 pounds below last year. And as we go, I think, well, first of all, why is that happening? I think all of the uncertainty has cattle feeders selling cattle on schedule. Most aren't specking on holding cattle longer. They're selling cattle into this market.
Makes sense.
And it's showing up there. Now, the other piece is now we're into April, Q2. We're going to see seasonally carcass weights drop as we start to get more of those calf feds in the mix, whereas Q1 is largely the yearling type cattle, which are going to be heavier anyway. So we're going to see carcass weights come down anyways, but we are running below last year. So that's a signal. I think one of the other kind of pickup points to talk about is how many feeder cattle have been exported here in the first quarter of 2025. This is APHIS data, so there's two different sources here, but 63,000 head for the first quarter. That's up 87% from last year. It's not like we haven't done those kind of numbers before, but not in recent years. We've been more on an import basis. So this is a little different. The last week of March, ahead of the unknown April 2nd tariff announcement dates, we did see over 15,000 head of feeder cattle go south. So you can see what's going on in terms of producers trying to make decisions based on the unknown.
Yeah, well, why the feeder cattle going south? We've talked a lot about how we've been a net feeder cattle importer, but for some of the audience, they're probably like, wait a minute, this is a reversal what you guys have been talking about. What's going on?
Well, I think until we had some certainty around what the tariff news was going to be, that the Canadian market would experience more of a tariff than what the outcome was. So I think it was a spec move in anticipation or expectation that there would be more direct tariffs on cattle or beef that did not materialize on April 2nd. So it was a spec move, maybe in hindsight. Who knows? I don't think a person can say what's right or wrong today, but I think at the time when those decisions were being made, the anticipation was that the U.S. would be the more premium market than Canada down the road. That might not be the case now.
Yeah, well, and like you said, it's hard to figure out what to do, and the dangerous, the risk reward of specking and moving inventory based on what you assume today, and we've seen a couple different flip flops in terms of what the strategy is this week, and so you can get caught on the wrong side of that very, very quickly,
Exactly.
unexpectedly. February trade data.
Yeah, StatsCan did come out with, and it's going to be interesting to watch this data just with all of the news that's going on. So this is February Canadian beef exports. Overall, to all countries, to the world, we were down 18%. Year to date, we're now down 9%. But I think there's more to the story. It's not just a tariff story or a tariff spec story, if you will. Canadian beef production is smaller so far this year, and that was expected. So our slaughter so far in 25 is down 8%, and the tonnage, when you take the carcass weights into account on everything, steers, heifers, cows, and bulls, is down 9%. So it stands to reason that we're going to export less when we're slaughtering less and producing less beef. So that makes sense. Just a comment of where the beef was going in February. To the US, down 12%, to Japan, down 41%, and to Mexico, down 9%. So kind of, again, is that, these are 1 month data numbers given what's known or not known on tariff news. So I don't think we can make 2025 conclusions on 1 month of data, but interesting to see what happened there. Now, we did have import data for Q1. So this includes March. So 1 extra month than the data I just gave you. But imports into Canada, beef imports into Canada remain pretty brisk. March was up 19%. Year to date, we're up 14%. And most of it is a result of increased imports from Australia and New Zealand. They're up 31% and 72% respectively. And beef from the US is up 12% in the first quarter of this year. So again, we've talked lots on this call, on this station about trade both directions, and who knows what lies ahead.
We're eating beef. There's no question about it. Now, one of the things, a lot of times we talk about the prices and the market and, demand and the fundamentals. Something that has really kind of turned around here quite briskly is the currency exchange. And, for, the live cattle future, the feeder cattle future is based on the U.S. market. And so that Canadian U.S. dollar conversion is really important. We don't have to go back very far. It's a matter of weeks where we were talking about, how low could the Canadian dollar go? The lower that dollar goes, the more that exchange benefits the exporter. Well, with the U.S. dollar having some massive challenges here this week, based on what's happened in the bond market and traders moving money into the yen and the euro, we've seen a reduction in the the U.S. dollar value, which has raised the Canadian dollar. And as of this discussion, we're talking, it's like 72 cents per U.S. dollar, and this is a reversal.
Yeah. Yeah. So exactly. And this isn't what we would have talked about even a month ago, Shaun. But as the tariff, especially the Chinese-U.S. tariff war, has played out so far, that how you've described it, but is exactly what's going on. But the industry was not really banking on this. We were looking at tariffs from our eyes and a weaker Canadian dollar, and it's gone the other way. So we need to remember that instead of 69 cents, we're talking 72, and the 3-cent move has certainly impacts on Canadian cattle prices to the downside.
Yeah, it definitely looks like it has some potential run in it where, is it 75
where,
cents?
who knows? But yeah,
we really don't know, and but definitely I think there's probably some exporters that are exposed and don't have that dollar hedged to minimize some of the risk because of the downside expectation that was out there in the market. So something to definitely watch.
Exactly.
And thanks a lot for chatting with us this week. Have yourself a great weekend.
Okay, thanks. You too, Shaun.